Hello, everybody. Today we're going to have our first ever out of the country podcast. Today is going to be me, your tax strategist, Denise Givan, and Miss Omolola Adaye K. She's our wealth strategist. So today we're just going to have just a casual conversation, and we want to ask questions that I know a lot of you guys are thinking about. So I want to open it up by saying, hi, my friend, my partner, my everything. We are here today, and I just want her to introduce herself, and then we're going to just jump right in.
All right. Hi, everyone. My name is Omolola Adaye K, and we are here in the beautiful country of Panama, in a beautiful, luxurious apartment, looking towards the ocean. We've had a refreshing weekend here, and it's just been absolutely beautiful and very, very relaxing. And we just decided, let's share a bit of that with you all. So my name again is Omolola Adaye K. I am a business advisor, wealth strategist. I enjoy finding people money. Is that not fantastic?
Yes, that's awesome.
We're talking about it all the time. So we just want to share again, what can bring you to decide. We're two very, very two ladies with very full plates, but we decided to take a time away from all of that and come to a refreshing place, and are still here giving of ourselves from what we love to do. So thank you for having me on this beautiful podcast. I'm so happy to be here, and let's just go on with it.
Let's jump right in. So The first question that has come in is, we're going to start opening up with one of the things that you and I talk about often is, why should business owners structure their business in a way that it first sets them up for funding? Secondly, it allows them to find different types of tax strategies. And thirdly, it opens them up to other business opportunities. So the question is centered around those three things. So the first question is, why is it so important to know how to structure your business properly if you're going to be looking for funding?
Oh, very, very important question. It just makes you look serious with the bank, with whoever is going to give you money. Everybody talks about the 3 C's. You want to look at your credit, your collateral, and that is when you're properly structured, you are able to have books. You're able to understand your numbers. You're able to also attract the right kind of funding and attention to your business. You go to a bank and all you have is a DBA, but you're trying to look for money to do something huge. The chances for them listening to you is going to be very slim, because many times when we have a DBA, what do? We mix our money together. So you're showing them your personal account for a business funding. How does that? Even if your child comes to you and says, hey, mom, I want to buy this truck, and you're like, okay, I want you to tell me what you're going to do to get the truck, how you're going to find the money for it, or maybe by working at home. But you have to have the child, show you a plan. It's the same thing with going to a bank or an investor or a VC or any of these, folks that are able to give money. They want to see who you are, what you're doing, what is coming in, and what you're going to be like in the future. And numbers don't lie. You'll be amazed what the numbers can tell you. And it's even better when you're properly structured.
I totally agree on that.
Yeah.
I totally agree. So now you brought me to my next thing. You kind of opened the door.
Okay.
Let's talk about why a lot of business owners, and I'm going to have to keep it real, because I don't ever want people to think, oh, she's on this podcast, she's talking about having your books together and all that. I want to just transition right into accounting systems and why we've already talked about, if you're structured properly, what that can do for funding. So let's take another step and say, hey, what about knowing your numbers? How do you even know your numbers? Number one is you got to have a system where where you can track your expenses and track all of your income. And so the reason why I wanted to tell a little bit about my business, it was a time where I did not have my books in order. I commingled funds. Now, let me break it down for those who don't know the word commingling. Commingling basically means that I paid for business expenses out of my personal account. And so let's talk a little bit about just this weekend. Since we are out of the country, me knowing better, I did not contact my bank to say I will be out of the country. When I was trying to use my business card, what happened? It was declined. It was blocked every time. It was blocked. Now what I had to do is if I was going to pay for my stuff, I had to use my personal account. Now that is a no-no. And I'm telling you that because I know better, but I couldn't just walk away and say, hey, my business card is blocked right now. I can't pay. But I'm going to have to do my due diligence when I get back home and fix it. I kept all my receipts and I have proof that this was a business expense because I was able to pay for my flights and all that thing upfront on the business account. So it all coincides with the dates. I bought the ticket. I got the, Airbnb. Yeah. We did all that. So now I'm going to have to go and strategically say, these are the things that I did for business, and I'm going to have to move them over. Now, that's a lot of work.
I hear you, But here is the thing. I don't like numbers.
Okay.
So how can someone like me who does not like numbers, but I do know it's very important for me to put these things in order. How do I fall in love with numbers?
I'm so glad you say it. And that's the key, the way you said, fall in love with numbers, because we as business owners, we need to know our numbers, whether we love numbers or not.
I totally agree.
So one of the ways that I suggest is apps. We use apps for everything on our phone. I have QuickBooks. That is just my preference for tracking my expenses. It's user friendly. Guess what? It even has a picture of a house when you need to go back to the home to start over. How simple is that, right? So I recommend a simple accounting system like QuickBooks. And I use QuickBooks Online, and it is very user friendly. Now, I don't want you to fall in love with numbers in general. I want you to fall in love with your numbers, knowing that I know I spent this amount, I know I brought in this amount, so I should have this amount. It's simple math. If you bring in $10 and you spend $5, you have $5 left. That is just simple as it gets. So let's take it up a level. If you brought in $10 million and you spent $5 million, you got $5 million left.
Yes.
So it's still the same concept, no matter how many zeros you add on that. But you got to be very strategic about using your business card only for business expenses. So if we can just get all of our listeners to know that commingling is the number one, that's the best ingredient for an audit with the IRS. Commingling your funds.
And that's the main thing that really prevents people from getting funds from getting funds when they need it to grow their business, because the banks or whoever you're trying to get the money from cannot see, clearly how your money is going, because they're looking at Walmart and then expense from Home Depot and then rooms to go and then a Chick-fil-A expense, all on the same bank account.
All in the same bank account. Now let me tell you how it would be if it was in my bank account, all on my business account. So the homes to go was for me to furnish my office. I went to get some office decor. Okay. The Chick-fil-A is that we had a business meeting on lunch at Chick-fil-A, and all of the staff was there. And let's talk about Walmart. I had to go get supplies because we needed paper for the office, and I had to go do some, office supply. I need the office supplies. I need to do shopping. And then what was that other one you said? Home Depot. Home Depot. In Home Depot, we were building a bookshelf in the office, so we needed to get some wood. All of those can be legitimate business expenses. Okay. So I'm just wanting to show you that everything we do, because we are business owners, you have to be able to document it.
Okay, fine. But then if you're not properly, coming back to the structuring, even if you want to take it as legitimate business expenses, can you take it as, how much can you take as a legitimate business expense for an EBA, for a single member LLC, and then you have a multi-member LLC, and you talk about S corp. So we have to also think of how we want to, where we want to start from, and how we want to grow, because that determines how much we can, take. I feel, right?
That's right.
Thank you.
So we're going to piggyback back to structuring. The number. So you've named different structures.
Yeah.
So you started with the DBA.
Yeah.
So DBA is me, Denise Givan, the tax strategist, doing business as the tax strategist, using my social security number possibly, or I could use an EIN. Okay. But I'm going to have a bank account that says whatever that EIN is. And it's just basically doing business as myself. And with that, I still need to keep it separate from my personal, because what can happen is, and let me tell you, since you said that, I'm going to just talk about how I was set up in the beginning. I started out with a DBA on the tax side. I was doing taxes just under Rapid Financial and Tax Service. I did. I had an EIN, but I did not have a separate bank account. I used my personal bank account until one day something just dawned on me and said, so which one of these, how do you know that this is a business, that this is a business expense? What I did was I broke it out and just use my savings account, which, but for amateurs, that's better than not having a separate account.
Correct.
So that's what I did in early years. So what I did was I had money coming in and it would go directly to that savings. But when I was ready to spend it, guess what? It came right out of their personal account. So all of these things are things that we need to just pay attention to. Keep it separate. That's all I want to say. Keep it separate. Because if you do that, it's no questions about whether it's business or not.
Yeah.
So structuring and so the other day I was on a call with a client. We were calling the IRS for something with the tax return. And in order for me to speak on their behalf, the client has to identify themselves, right? So the client started to identify themselves and say, yes, I'm calling about my LLC. And the IRS said, we don't recognize LLCs here. So what is it? How is it taxed? The client didn't know that. They were actually taxed as an S corp. They just know that the name of their business was an LLC. The reason I brought this up is because you need to know how you're taxed in order to have the proper setup and bank account. If you are an S corp, now the bank account really doesn't matter what type, but you need to make sure that you're running a payroll if you have an S corp. And so I suggest that, this is just my personal preference, is not to have an expense account for your S corp and commingle the payroll with that. I like to have it separate. Why? Because if you're running a payroll, if you're the only person on the payroll, you want to make sure that the funds are available when the payroll runs, because most payrolls are automatic. They run every week, they run every 2 weeks, semi-monthly, however you have it set up. So these are things that you want to learn and start, because when you do get employees, if you are an S corp, you must run a payroll. So these are things you need to know. So move on to the C corp. C corp, me and you, we have this thing where at first we were like, S corps, but there has been some times that we've had to kind of retract our words, But a C corp allows you to do a lot of things. I like to set it up as, for those of you who've been in corporate or still in corporate America now, think about your business being your corporate job.
Exactly.
Yes. Think about it in that sense. And I know a lot of people are saying, what do you mean by that? What do your company offer you that you're able to take advantage of at your job? One of the things is a 401k.
Correct.
So if your company can offer you a 401k, why can't your corporation offer you the same 401k?
Yeah.
So I want us to start thinking like, I am a corporation. I can do these things for myself, just like my job. And you can also match the funds that you're putting in there as a corporation. So these are things. Also, what else does your company offer you? Health insurance. Give yourself the same health accounts in your. So these are things I want. A lot of people say, well, the reason why I don't want to start a business is because I love the benefits at my job.
You can give yourself those benefits.
Absolutely.
That is the thing. And I very interestingly, just as we were talking, the thing that came to mind is how the IRS looks at these businesses and how they're taxed, vis-a-vis how the law looks at these businesses and how they're taxed. So the states follow the law, the corporate laws that define what the entities are. And funny enough, that's what the banks look at when they're lending. So you see, so when you're talking to the bank or you're talking to an investor, private investor, they want to know, are you a corporation? Are you an LLC? They would rather fund a corporation or an LLC. They would not really want to fund a DBA.
So what do you think? So what do you think? Why they don't? Why they would prefer corporate?
They would prefer a corporation or an LLC, mostly because of your corporate records, your operating manuals, your bylaws, and what they state you're doing. It shows that you are a legitimate business running something, and then your numbers speak for themselves. That's what they're looking for. With the IRS, it's very interesting, great to know that we have to balance on both parts. And that's a great thing. I know we're running out of time, right?
Well, I know we're wrapping it up. It's one thing I want us to kind of just talk about. We're going to transition a little bit. So let's transition to people who've already taken the initiative to structure themselves. They already have a structure.
Okay.
So now so we're talking to this group of people. So now that they're structured and they're like, okay, what's next? This is you and I are always pretty much on the same page when it comes to this. Let's talk a little bit about how the structuring can benefit those who want to get into real estate. Like one of the reasons we're here in Panama is because we look at real estate.
Yeah.
And so by us coming here on business, we look at different ways to scale our business. Talk a little bit about that aspect for those who already structured and how they can use part of their corporation or the way they're set up, not to just function in one way, just for benefits on paying between structures and things of that nature. How can they elevate that is what I'm saying.
Okay. So when your structure allows you to really understand where your money is going, you're able to have a good control of that. And then you're able to now, with the help of your corporate advisor and your tax strategist, these are relationships that need to be kept. It's not a one-time thing. It's a business relationship that continues to grow with your business. You're able to look at your cash flow. You're able to understand your cash flow and then decide what you want to do with that excess cash flow, because you can see when it's coming and are able to plan what's the best way to go with it. And typically, in any economy, the very first place you want to look at in putting cash flow is real estate.
Exactly.
Because it's a bankable asset. Exactly. And you are able to even reduce your tax burden when you have your money in real estate assets. It's so simple. It helps you reduce it, and because you already have the structure that allows you to do the write-off that you need to do, allows you to expense the way you need to do. Then you don't show that money in your books. No, you put it away. You put it in real estate. Right. It doesn't have to be real estate within the U.S. That's what we're here to show. That's why we're here in Panama.
Excellent.
We can look at other countries that their economy is doing well, and they have the opportunity to invite folks to come in, stay a little bit, enjoy the peace and tranquility of their country, and you can benefit. I can name several countries that can happen. But all this does not begin without the structuring. So that's the structuring comes in place. And then you're able to sit down with your advisors to really look at what else can I do with the funds that I'm bringing in that excess. There's so much we can talk about in that regard, but yeah.
So thank you so much for coming with, you and I, we always have a lot to talk about. And people, we want them to just really get to know us.
Yeah.
And how they can get to know us is that when we're not doing this on with a microphone, we're doing this on the phone.
Yeah.
We're doing it when we see each other. Yeah. Because why? We love the people we serve. And why not give them all this knowledge? We have ways to make sure that you're ready to go to the next level. Each time you're structured properly, your books are in order, and then you have opportunities to invest it however you see fit. And so,
guidance.
With guidance.
The right kind of guidance.
So today's episode, wrapping up, it's 3 things I want you to take away. The importance of being structured properly. Number 2, having your books in order. No commingling, people. No commingling.
Fall in love with your numbers.
Fall in love with your numbers. And number 3, with all of the savings that you'll have, learn to invest it into something that's going to bring you back a return on your investment.
That's going to keep your money in a way that you can now borrow against it, and you can also lower your tax burden
at the same time.
Yeah.
So that is what we're here for. So if you're not falling in love with your numbers, guys, you got to start falling in love with your numbers. Now, stay tuned for our next episode. We're going to bring you some exciting information. Now, I'm not going to spoiler alert. No spoiler alert. I'm not telling them what we're doing next time, but stay tax savvy and make sure that you're ready to move to the next level in business. We love you guys, and we'll see you on the next episode.
See you soon.